All right, Imran, we're back. It's been a while here. Today's Monday, February 26th. We're back for our Monday. It's kind of a mid-morning meeting. I know for you in London, it's probably
Yeah, a little bit delayed. Yeah,
but a lot of interesting stuff to talk about nonetheless, with just market overall ripping. So I want to start here quickly. I know I got your sheet up here, but I just want to get your quick take on volatility, just sort of writ large. One of the interesting things that came up, and we posted this in our note this morning, was about realized volatility. And if I flip over to this chart, actually, we can see it a little bit better. But I was surprised to see this. We have 1 month realized vol. It's up at 14-ish, as you can see on the screen here in that bottom yellow box, or about 13 and a half in 1 month realized vol. 5-day vol is at 14.6, which after NVIDIA, market just really ripped. And my kind of macro call here is that I think vol is going to really start to just condense in the S&P 500. And we can talk about that trade in a minute. But what's your sort of just take on this? Is this the classic kind of stock up, vol up scenario? Should we just extend this into perpetuity, or give us a quick lay of the land here?
look, I think the market stretched. I thought semis were stretched. I was looking for a pullback in semis. It lasted 2 days, and then NVIDIA came out with bumper results, and they took the whole market higher. So, the realized vol is being a little bit flattered by that gap, 2% gap day higher. Without that, we did have actually quite small moves close to close on a lot of the days last week, and that's partly why index vol is getting smashed. Index vol also got smashed on Friday. Specifically, fixed strike vol moves were down 30 to 50 basis points in the front of the curve, and you generally tend to get a bit of Friday selling, right? Because a lot of the systematic guys who are selling vol are doing it on Fridays. So the street knows they're going to get hit, and if they get hit, they want to offload it, whatever. It tends to have a bit of market impact on Fridays often. So I think that's why implieds are trading. Implieds are basically pricing in that this S&P realized is not sustainable. It's going to go lower. It's probably going to go sub 10 at some point, is kind of what the implied is trying to tell you. I think whether it's right or not, I don't know, but that is kind of what it's indicating.
Yeah, and if you to your point, if you looked at for today, the at the money 0 DT straddle was 39 bips, which is just about as tight as you can get. This is the VIX 1 day, which I don't pay a whole lot of attention to, but I just thought it was interesting because you can see here we opened today just at one of the lowest values in this index this year, which is just sort of speaking to this. And so we have the CPI coming up on Wednesday, I believe, right? And then so that's kind of like the near-term data point I think people are fixing on. But those vols, as you mentioned, are really quite low and just getting crushed. And so on this point, I think that we're going to start building into the March OPEX now. So maybe vol is going to hold up until we have core PCE on the 29th. That's this upcoming Wednesday. So unless we get some kind of tail print there, our trade that we were recommended on Friday was, look, way to play the index movement slowing down here. This may be these opportune times where stuff like this UVXY or VXX, these VIX ETNs get crushed. Any kind of comment on those?
Yeah, I mean, you can never underestimate vol's ability to go down, right? It's the mistake a lot of us all make, and even the guys who've been doing it a long time, they see these cheap vols, they think vol's mean reverting, try and buy a bit of a dip in vol, and it just keeps on going, right? Yeah. So, I've got some March calls on the VIX in the book. They're not doing me any favors. I'm not dumping them, but, I don't necessarily expect them to do that much. NVIDIA was the big risk event, right? And now that NVIDIA has kind of gone the other way, it's kind of hard to see what's going to drive us lower. I mean, we do have quite stretched sentiment. And I was really surprised. I don't know if you saw this, but I was really surprised to see that retail was selling the market last week, right? So you had like inflows from kind of real money, but you had retail apparently, according to data from JPM, retail was offloading on single stocks, which surprised me.
Yeah, I thought that was interesting as well. And the other thing that was related to me is that, and I understand that when you're talking about the wealthiest people in the world, a lot of this stuff is scheduled. But I saw insider selling from obviously JP Morgan. Jamie Dimon came out; he's selling stock. Yeah. I believe the CEO or one of the top people at AMD is selling some stock. I think the Walmart clan is starting to sell some stock, which I thought all this stuff was interesting. You see all that firing, and maybe that's just, that makes the headlines because it's the systematic, the way they do things when you're, again, that wealthy. And it's one of those things I wanted to drill in. But that was interesting that those headlines were kind of percolating recently.
Yeah, I saw that thing about JP, but it didn't really do much to dent the stock, though. Stock is bulletproof, right?
Yeah, they're doing, just these stocks are doing really well. And, what's interesting is that when you look at the skews of a lot of these bank stocks, like Wells Fargo came up, and Wells Fargo right now has a 90-something percentile skew. So, people are positioned long in a lot of these, mega cap banks. And to your point, they're looking kind of bulletproof right now, but these likely don't have any commercial real estate problems if that ever does become a problem. And, they seem to be positioned pretty well. So it's remarkable. Two other things I want to pick up on. Amazon got added to the Dow today. That's not doing anything for the stock, really. Not arguably all that surprising, but just kind of an interesting thing to note. We also have the Apple Investor Day on Wednesday. Not Investor Day, it's their annual shareholder meeting. This stock, really struggling to catch a bid. It's not getting crushed, but with everything else breaking out to new all-time highs, it's interesting. This is the second largest stock. It's not doing much. Same thing with Microsoft. It's still not at that all-time high. And then Google, with a lot of its issues recently, can't seem to get up to that all-time high either. So the Mag 7s are lagging, a little bit here. And I see call skew rankings pretty high in a lot of these names, suggesting that I think these things could play a little bit of catch up, meaning some of those Mag 7 names that are lagging. Any views on those, the kind of top stocks there?
I don't know. It's weird. Like so you're saying relative weakness in those names as compared to what Nvidia did makes you want to buy them. I'd say relative weakness in them makes me not really want to buy them. But yeah, I think I've just got a bit of a bearish bias up here, right? Like looking at these levels, looking at every man and his dog giving up the towel on the bear trade, sentiment it just looks a bit frothy. But it's been looking frothy for a while, so that doesn't mean I'm timing it well, because I know I've been trying to short it for a while and failing to make anything off that. But that is so parabolic, that Nvidia move.
It is. And these are the last time, and I'm doing this from memory a little bit here, but these are the last time they reported earnings where skews were so heavy. And you can see that the stock tends to just have, and if you look on our Twitter feed, we have better charts, but there's my notes actually popped up here. So you can see what it did last time call skews were this heavy into earnings. The stock tends to kind of consolidate. It's like it makes the move into earnings. Everyone's buying that, the word's escaping me, but they're pulling forward the returns, the earning returns, basically. So it doesn't necessarily need to be that the stock craters like it did here in 2022. That was an exceptional year, but the earnings got pulled forward and it's time to digest, which is part of the reason I think that people are now looking across and saying, hey, what names haven't hit all-time highs? And Apple could really screw it up here on Wednesday. I think if they whisper any kind of AI-related thing or chip-related thing, then they probably revisit. Buffett did sell some stock recently, but
that's a good point.
I just think we're at that stage where people are like, what can I buy? What can I buy? What can I buy? And I do think we're very stretched, but what's the trigger right now? I'm looking at, obviously OPEX, most of you can predict now what I'll say is, OPEX will kind of shift things a little bit.
What's the Apple vol like? Is the Apple vol quite cheap?
It actually is fairly low. I was looking at it today. I say it's low based on this Apple VIX, right? Its ranking has come down after earnings, obviously. So the skew is rather high, meaning calls, if you look at the risk reversal, calls relative to puts are loaded, meaning I think people are buying calls in the event that this thing pops. But it's, its IV rank has obviously come down quite a bit. And in fact, if we go over to implied vol dashboard, by the way, any of you who are interested in looking at implied vols or really diving in, there's a QR code at the top for our vol challenge. Join that. But this is term structure for Apple. It's actually not pricing in much around, this investor day or shareholder day. And if you look at 1 month skew, which is here, we're at the bottom of this cone, which is the 10th to 90th percentile. And this is 1 month vol. I realize that everybody only trades the 5-day option or less now, but all seems to be, they could upside surprise here, and I think generate a decent squeeze.
So the lowest vol was around the 190 strike on that skew. Is that 1 month? Yeah.
Correct.
So that's like 5% out of the money. So basically, what you're saying is 5% out of the money calls struck at 190 for the 1 month for quite good value here, right? That's what it looks like.
I think so, based on this chart, and I think that in this environment where you can see that call skews are higher, I think that there is a bit more of a stock up, vol up. I mean, we're in that regime right now, right? It was quite interesting because there was this post going around on Twitter about this guy who he keeps YOLOing these calls, and
silly money around
that.
Like, yeah. What's his strategy? Is he doing 1 day options only? Like,
I think it's shorter dated. He's having a lot of success, and there was some discussion. Is he using like a martingale betting system where, and he appears to be doing that based on some of the comments that, look, he does this where he makes, a couple $1,000,000 on these YOLO events, and he pulls some of the cash out and puts it into the Wall Street Bets guy, and then puts it into dividend stocks, right? And then he takes another 300 grand and just repeats. But you can only get away with that in these types of environments, right? Where calls print now because of the environment. It doesn't mean that you pick the right name. It's just that this environment stuff really leaps, right? The stock up, vol up is there. You could hit a lot of scenarios in markets where stuff is really sleepy, and that call premium just burns up and doesn't, really print, right? And so back to this point here, if Apple can do anything that shows AI or chips, and I have no idea if they do, but just I think you just whisper that into this, into the ether here. You get paid.
Yeah, totally. All you got to do is say the word AI. I hear you. I mean, I think what you're flagging. Well, when is their Investor Day?
Wednesday.
Yeah, I mean something like the April 190s. They're on an 18 vol, right? I mean, it's been realizing 11, but the point is this is a potential event that you're talking about. They basically cost $2 and a bit, just under $2.50. The April, and I'm saying April because I just don't want something that decays that fast, right? But the April 190s don't sound like a crazy trade. Like you probably double your money on those and get out, right? If they say the word AI, right?
These are what the vols look like, and so you can see they're low. Red is telling us that these are relatively low compared to the last couple months, and so you're talking about these Aprils, and there's what your vols are. So they're, is it cheap? No, but I don't think you're going to get much upside in the index stuff at this point. I think the semis, the semis in terms of NVIDIA and the like, that trade may be a little done. So I just think it's this rolling vector of what can we squeeze next. So that's what's interesting there. And as far as our squeeze gainer goes on that same point, these are the names that are showing up. And interesting on here is, Meta obviously showing up. And these names have, based on options positions, we actually did a back test on this, and the forward returns from a 5+ day period are really pretty positive from these names in the squeeze scanner. So you got your semi stock there. This is the Masa, the Masa stock, right? And then you have Netflix. But the other thing that I made mention of, so here's another example, right? Like it's not at all-time highs, but this is squeezable now to me. Was this PAN-W, which showed up on our squeeze scanner and also has a 99th percentile skew. This thing got hammered after earnings, which is another feature of this market, right? If you don't posit good earnings, you get smoked. This was down 20%, but now people are buying these dips, right? And you can see this now. It has a very high call skew to this point of sentiment right now. It's like, oh, great, this is a discount now. It didn't drop, for any other reason other than to offer us a discount, right? So let's turn over to your strategy scanner here. It's a great.
Well, you can see Apple, right? Apple was down there, not a million miles away from the buy call zone. That kind of lines up with what you're saying. I'm just not particularly bullish broader market. I was looking more on the short side, like what could I sell?
Yeah.
I was looking at Costco. I was thinking Costco it's amazing what a run Costco's had, right?
Yeah.
And it's not an AI stock. It's a flipping
Do you have Costco over there in London?
Huh?
Do you have Costco over there in London?
We do. I don't really use it, but we do have it here. Yeah.
You got the cheap hot dogs over there?
What?
$1.50 hot dogs. Is that a thing in London? Probably not.
I'm not a big hot dog eater, to be honest. No.
A lot of people go there because the hot dog, you can look up the story. It's pretty interesting. They do all this stuff to keep the hot dog price very cheap to get you.
Yeah, I heard about that. But anyway, look at that stock, right? I mean, that seems to be making a bit of a wedge, when it kind of narrows into like a point, basically, right? So it's making a wedge. I mean, it's been bulletproof. I've been trying to like play mean reversion on this way too early because it isn't mean reverting. But it's got earnings on the 7th of March. Vol's a little bit elevated. It's certainly not in the cheap zone. So I was thinking, how would I play a potential pullback? Maybe like a put ladder trade where you buy a put, sell a put behind. And you go, you'll think, I'm looking at March, right? So just 15th of March. So like a week after the earnings date. So what you could do is you just put that on now, and then before the earnings, you buy back the 680s and you just leave the put spread on. But you've kind of funded it a little bit while you waited for it. That's kind of how I thought about it. But it doesn't look too bad to me. $6 to make potential $30. If it pulls back to 700, it's sitting at 740-ish right now. What's that? How many percent is that? 5% and a bit? 5-6% pullback? It's implying a 3% move for earnings. It's had a good run. So it's one of those, if it disappoints on earnings and does get whacked, like you said, it's kind of happening in names that miss, then you'll do all right off that trade, I think. Mm.
Yeah, I think it's a good idea. I mean, the thing about this market is that obviously, and there's the Costco, that's just a very low implied earnings move, right? I mean, it's the lowest of anything coming up here, right? As you can see on this earnings chart. And if you go to spotgame.com, by the way,
it's a supermarket though, right? I mean, it doesn't tend to have massive earnings moves. Like 4 or 5% is a big move for Costco on earnings, right?
Yeah. It's just interesting. It is far and away the lowest. I don't know what Walmart announced the stock split last week, right? So they, here's their earnings move that came up. So they did about 4% in and around that area. So kind of interesting stuff. And at some point, we're going to pay the piper, and the market's going to kind of revert here. And I think that, you got to look for these windows where positions are going to change and maybe sentiment's going to change. And so, that's why we're looking at that mid-March time frame. But, for the moment, playing the pullbacks has been pretty tough. But because everything is so laddered up, I do think that, the move down will be violent just as a function of all these positions kind of reversing. But, that it's musical chairs for now. You just got to, the music's playing right now, so buy the dips, I guess. All right, so you like that Costco put. I like Apple calls here. I think the one that you flagged were interesting. Kind of end of month, I would just give them a month, 5 to 10% of the money calls. And in our note on Friday, we said, look, this is one of these days, time frames where I think you can kind of sit on the decay of these types of products should be pretty strong now, just because I don't think the index stuff is going to move at all. The VIX itself may hold up a little bit until we get past this Thursday morning PCE print. But I just think that we're in this regime now where the VIX is probably going to start to visit, these Feb lows. And so
you could play Easter. Maybe you could play some Easter VIX, right? So Easter's at the end of March. Agreed?
Yeah.
Yeah, so maybe you do some April VIX puts or something just to play that. If you think VIX is going sub 12 again, that's the sort of trade that would probably look okay. Just bringing up the options chain on VIX. 17th of April, VIX 13s. They don't sound too expensive. VIX 13s are worth 30 cents, right? So if you thought by Easter we were going to see VIX get crushed below 12, it's been holding at 12, right? It doesn't want to get below 12, where it hasn't up till now.
Yeah, it really hasn't. Going back to December, it's been pretty stable there. So,
but seasonality matters in vol, right? So obviously, you normally do get a bit of a pop in the VIX into March.
Yeah,
but we haven't really had. We had that very, very short-lived one, and that was it, right? So if we're not going to get one, and then you get the next leg down in vol, then yes, we might actually take out those lows at 12, right? So, I mean, I'm more inclined to kind of wait for the seasonal spike in VIX to then fade. But we haven't we had it for a day, basically. So maybe we don't get one. Maybe we don't get one, right?
Yeah, and the moves, they've been violent. Like during the roll periods, right, into VIX expiration, we we spike up over 15, as you can see here. But then that is just immediately just pounded, right? And it just reverts in a flash. So, this jumpiness, if you get stock up, vol up, well, when that unwinds, that vol's just going to spike to the downside, right? Because of the positions that are here. So, there is some jumpiness, but again, it's hard. It has not been fruitful trying to play this. So,
no, definitely not.
For now, I think our best chance is position shifting around March, and barring some type of major kind of credit issue. I think that because of the election year, I'm buying into that idea that there's some economy of policies, and for now at least the next couple of weeks should be cruise control. So. That is that. I love the idea here, Imran. Again, looking at Costco, VIX puts are also interesting. Again, Apple calls. Maybe they could surprise a little bit here on something interesting with the shareholder meeting, and then just
that's like a whole shopping basket of options there, mate.
Yeah, well, we got to give a variety of everybody, so a variety for everybody, and then we can spike the ball on one thing next week. We'll list out how those all played out next week. So. Imran, thanks again for the time here today. You've been posting some great stuff up there on Twitter, so go check that out. Where can people reach you for some more?
Options_insight on X. We're also on YouTube. We put bits of our content up on there, and our website is the best place to come find out all our products, what we do. We've got options courses. We've got research. Come check us out.
Awesome. Thanks so much. And again, we're running this volatility challenge. I should show that quickly. You can sign up for that here. We'll put a link to it in the show description. We have a free webinar come up tomorrow night at 8 o'clock. And we're going to be talking about the VIX, interestingly. So please come and check that out. So with that, Imran, we will see you next Monday.
Cool. See ya.